Hey guys, welcome back to another video, and today I'm here to talk about 5 stocks that you should buy right now. This is going into November at the end of October. These are stocks that I think you need to get into before they start running in the direction I think they're going to go. So don't forget to like and subscribe, guys. Please like the video. It literally takes 2 seconds. It helps me out a lot. I really appreciate it. Appreciate all your guys' support. And let's get right into it. So with stock number 5, we have Amazon. This is ticker symbol AMZN. You guys probably know about this stock. So with this list, we're going to go 5 is the stock that, all of these are great buys. 5 is the one that I'm not buying the most. 1 is the one that I think you should buy the most. So we're going least to most attractive buy right now. And not to say Amazon is one of the most attractive buys right now in the stock market. It's in my top 5. Revenue, obviously insane. We see the PE ratio is relatively low compared to some of its competitors where I think it should be. This is just a graph of the stock price over the past year. Nothing impressive. They're pretty flat, but they do have a few impressive financial metrics. So their net income is up 59% year over year. That is just, you need that in your business. And then the fact that they can still grow it while they're at these levels, very impressive. Their segment results internationally, their operating income is up 448% year over year in that segment. And then their net sales is up 16%. So I think the international is the future for a lot of these big companies. They've already conquered most of what they can in America. And I think international is where they're looking to go next with, making more money. There's more people. And then their free cash flow. This is something that I wanted to talk about Amazon because this is my biggest fear for Amazon is their free cash flow is dropping quarter over quarter. I'm not worried about it. I think the company is just making a lot of investments. Like you see purchases of property and equipment, nets of proceeds from sales and incentives is also going up quarter over quarter. So I'm not worried about that at all. And their operating cash flow is going up as well. So there's not really a big worry there if you guys were worried about that. This right here, very important tool that I use for every single one of these stocks that I screen and buy. This is market-io. Affiliate link down below. You can get a 7-day free trial, no obligation to you. You can try it all for free for 7 days. I'm very happy with this. We'd look at the average price target, the highest price target, and the low price target. There's 11 ratings, 11 analysts. This is the average of all of them. The low price target is still a 4.8% gain, but I think the low price target probably isn't going to happen. I think somewhere between the average and the high upside price target is what's going to happen, and that's within 12 months. So if you can outpace the S&P 500, which is on average gaining 10% a year, and this stock has no problem doing that. This stock does that year over year. They've done that, ever since inception pretty much. They've had some bad years, but a lot of the years they outperform by a lot. So overall, why would you buy Amazon? I think that its international growth, the growth that it can have internationally is very impressive. There's a lot of factors that go into that, but also it's just taken over America. You can order groceries for cheaper than going to the store. You can have them brought to your house from Amazon. They're unbeatable. Amazon has everything down. They can just, get everything the cheapest to you, the fastest. They have a network that no one can come in and just say, okay, I'm going to be better than Amazon. It'll take a long time until someone's better than Amazon. Also, this is a long-term buy. This is a company that I see growing for the next, 10 to 20 years. I feel very safe investing in this company. When I buy single stocks, I always look into the future, but with this one, I look very far into the future. So I think Amazon is a great buy right here. Very attractive valuation for this one as well. I think it's always a buy in any market and a great stock to build your portfolio around too. If you want to have one main holding, I think Amazon is the one that you should have it for. So on to our stock number 2. This is stock number 4 actually in our list of 5. This is Elf Beauty. So Elf Beauty is a makeup company. They do, like it says here, eyes, lips, and face. This is a company that's sold a lot in Target, Walmart, drugstores, grocery stores across the world. They're also expanding internationally. They have 26 consecutive quarters of net sales growth. The only stock that has done this in the Mag 7 is Nvidia. So there's 7 stocks in the Mag 7, as you guys know, and you probably know every single one of those stocks. The only one out of all of those, Amazon, every single one of them, Google, is Nvidia that's grown for 26 consecutive quarters. Their net sales has grown. Very impressive from Elf right here. So, that's just one metric, which I'm very impressed by. The fact that a makeup company can do that, comparing it to Nvidia. Their revenue right here, we check on Market Dash, their revenue is growing great quarter over quarter, year over year. So there's no, stagnation in this revenue growth. This is a company that is growing. Their growth rates are why you're investing in this company. But here are 2 main reasons. So their pricing is increasing by $1, effective of August 1st, 2026. every single product is going to be $1 more. So I'm very happy with that addition from e.l.f. into their company because they're very cheaply priced makeup. That's what this company does. They have very cheap products. They're the cheapest product on the shelf, but they do get the job done. They're very good at getting that job done. But that is their business model, is they're selling a cheap product, and it works very well. A lot of people that want to buy it for cheap, like with anything, and the quality's there for how cheap it is. So also they're in the skincare game as well, not just the makeup game, because like I say all the time when I talk about e.l.f., makeup is not, it's mostly catered towards females, so that's 50% of the population. They're cutting out 50% of the population with their brand. But they're penetrating into the skincare space, which is used by everyone, 100% of the population. I mean, probably not actually, but I'd say upwards of 90%. So a little bit better than 50%. And then not all women use makeup. If you want to get technical about it, you can, but I think that they are garnering 90% of the US population with it adding skincare into their, penetrative marketing strategy. I think they're growing from 8 to 18%. It's not anything crazy, but I think if you keep it up over time, you keep this steadily growing. I see, they're getting into the 30 percentage points, and they're one of the main leaders in skincare. That's a huge space that I think is going to grow more and more as we go on with time. So why buy e.l.f.? e.l.f., it's to diversify your portfolio. If you have a lot of tech stocks like me, I am very tech heavy. So if a tech, something happens in tech, I feel it heavily in my portfolio. Definitely a big weight in my portfolio. So having some e.l.f. is great. I mean, obviously sometimes tech is going to be up and e.l.f. for some reason is down, which is fine. But I mean, a lot of the times tech will get hit hard and e.l.f. will be, in the green 5 or 6%. So that's a very nice boost to my portfolio on those days, especially for the long term. And e.l.f. is the leader in makeup. They are the best brand, the most sold brand. So they're the leader in their sector. That is very important. If you want to have, if you're able to invest in anything, why not invest in the best? Invest in something that people are using. Also, market growth. This company's in a market that's going to grow very fast with time. I think, as population grows, as people, as times get tough in the economy, which looks like it might happen pretty soon, people are going to resort to the cheapest product, which is e.l.f. People are already buying e.l.f., but people that were buying products different than e.l.f., I think are going to buy e.l.f. And also people aren't going to stop buying makeup because of the economy. It's kind of economy proof, I think. There's not a lot of people that are going to stop buying makeup if the economy crashes, which I'm not saying it's going to, but anything can happen. So I feel confident investing in e.l.f. for the long term for those reasons. On to stock number 3, SoFi. If you guys know me, I love SoFi stock. SoFi stock is the future because, look at this, the future. As of mid-2025, Chase Bank has closed 23 U.S. branches. That's halfway through 2025. There's also planned additional closures for the remainder of the year. Surprise, surprise. Wells Fargo has closed 49 branches in 2025. As of late March, that's 2 months into the year, they closed 49 branches. And then total closures, 19 Bank of America branches are slated for closure in 2025. So something's wrong with these banks. They cannot afford to keep paying leases. It's not worth it for them. But who are these banks' main customers? It's the older generation. So the older generation is who is going to these banks. That's who's buying all, or going in and cashing their check, or cashing their direct deposit, which they don't have. They have it in the form of a check. So they need to keep these branches open for as long as the boomer generation is alive. But SoFi, like we're going to check out right now, their growth rates are insane because they don't have any physical locations. So look at their, their financials right here. They blow me out of the water looking at them every single time. So their net income is up 459%. Just let that sink in for a second. Oh my gosh. That's in the past 3 months. And then it's up 60% in the past 6 months. So this is not just a fluke. And then we see the same thing with their total net revenue. That's up 43%. So just a lot of great stats. Adjusted net revenue up 44%. Everything is looking amazing with this company. They're making a lot more money, and I do not see this slowing down anytime soon. Look at their gross margin. This is a company that's in a competitive space. Their margins are 82%. When you don't have, like for example, just off the top of my head, I know because I've done so much research on this space, on these stocks, Bank of America and, Wells Fargo and Chase, they all have upwards of 200,000 employees. SoFi only has around, they have between, 1 and 10,000, not much at all. SoFi does not have many employees at all, and they're able to still run a business of this scale because of what they've made, what they've built from the ground up. Anthony Noto, great CEO, done a lot of things amazingly. But with this gross margin, as you see here from Market Dash, we see that, I mean, that this is a competitive space and you're beating your competitors by this much, they have a competitive advantage. That's how you want to value stocks. If you read books on value investing, it'll tell you to get a competitive advantage, you need to have, between a 60-70% gross margin, because that means you can charge more for your product in the same market. They have an 82. Very impressive right there. Also, a few slides from their earnings presentation. I mean, their members are growing at a compounded annual growth rate of 51%. Yes, 51% is what their members are growing at. So that's insane. Same thing with products. I'm not as worried about that. But the fact that this growth rate is so high with their members, that says a lot. A lot of new people joining SoFi, a lot of young people joining SoFi. Young people don't want to go into the bank. They would rather, cash their direct deposit online. They want to cash their check online. They don't want to walk into the teller. They don't want to walk in and talk to the teller. So there's a lot of things that are going great with SoFi, and the fact that they are targeting the younger demographic. Their wealth is going to grow over time. That's the main driver of wealth. I have so many videos on SoFi if you guys want to go see those. This is just 5 stocks, so I'm not going to only talk about SoFi, but I mean, they are very impressive. SoFi is one of the most impressive stocks in the stock market, and they have a great future ahead of them. So also durable growth. I mean, just look at this. They're up 44% year over year of adjusted net revenue, like we were talking about in their balance sheet. Also, their EBITDA, their net income. We see this company just became profitable last year. So this is very new for this company. That is what, flipped in the stock price. So it's very impressive that this company has gone to this point so fast. And this is growth rates that are going to be sustained and going to grow over time, I think. So very great for this company. Why buy? So the only reason I'd say, I'm just going to talk about the bad first. The only reason I'd say maybe not to buy SoFi, which I'm not saying not to, I'm saying you should buy SoFi, is if people say it's too expensive. People will tell you, if we go back here, that SoFi is too expensive, so they don't want to buy right now. They're up 83% year to date. You need to take your emotions and put them in your pocket and save them for later, because SoFi is reaching new all-time highs every single day. There's a lot of growth for this company. This company can be a $300 stock. It doesn't matter if its all-time high in 2025 was $29, $30, whatever it is. It doesn't matter if that was their high in 2025. You have a $300 stock. Especially the market cap of this company being so cheap, especially compared to these big banks, it's gonna be a top dog one day. There's no reason it's not. So I think buying it for 29 is a steal in the long term. If you're buying it for a week, then maybe it's not a steal. Maybe it's gonna drop all the way, I don't know, to 25. If it drops to 25, I'm buying more. I'm just buying as much as I can for under $30 while I can. I don't think that's gonna be a thing for long. So that's just to, if anyone thinks that it is expensive, I'm here to tell you that it's not. It's priced pretty fairly. It's priced very fairly for what it is. This is a company that has an insane runway of growth. So why buy? It is the future of banks. As you guys saw, a lot of the big players are closing down. A lot of these banks are having trouble. They're not able to keep up. They're paying too many employees. They have too many locations. It's just not worth it anymore. SoFi said, you know what? We see what's happening in the banking world. We're going to go out and we're going to make, banks that people don't have to do this. People can just do it all online. We don't have to provide, hundreds of employees working for $60,000, $80,000 a year that we have to pay and rent these, big buildings with 20, 30-year leases and put 3 banks in every town. No, we're just going to do it all from all online. And it's worked out great. They also have insane growth. The growth potential for this company is insanity. With the margins they have, the numbers they're bringing in, I'm very happy for SoFi. They're also, like I said on this third point, they're in the early stages. They're in the early stages of growth. SoFi is under $30. That's going to be a big thing. Me saying SoFi is under $30 right now sounds like, oh, SoFi is expensive. When we look back on this video, you guys can save this. Look back on this video in 3 to 7 years, kind of a long time. But to say that you bought SoFi for under $30 is going to be a pretty impressive statement at that time, I think. So I'd say buy as much SoFi as you can. This is one of my favorite stocks in the stock market. There's only 2 ahead of them in this video right now, and this is purely timing. If SoFi does drop even more, I'm buying more SoFi. I can't get enough of this company. So that is stock number 3. Stock number 2 is AMD. This is my largest holding, to be completely transparent. I have over 60 shares of AMD in the portfolio. AMD is up a lot. AMD is up 105% year to date. They have a revenue of almost $30 billion, and their PE is fairly high. Why would you buy AMD right now? So AMD and OpenAI have a strategic partnership where AMD will supply 6 gigawatts of its AI chips to OpenAI over several years, beginning with a 1 gigawatt deployment in 2026. In exchange, AMD has issued OpenAI a warrant to purchase up to 160 million shares, giving OpenAI a potential 10% stake in AMD. So, I mean, I'm not going to read all of it, but as you guys see, basically, AMD partnered with OpenAI. OpenAI is giving a lot of money to AMD to make them chips. This is going to be a snowball effect, in my opinion. I think this is going to bring AMD a lot of money. I mean, it already is. The stock price is already reflecting that. But over the next couple of years, we're going to see AMD go up a lot. This is our revenue chart right here. Pretty consistent growth. It's not linear. They have had some tough times in 2022, to say the least. But I mean, it's pretty good still. Just to say that, I mean, they're making $30 billion a year. But this is where, this is what I want to talk about mainly. So client and gaming segments. So this is a segment that was struggling for AMD the past couple of quarters. You see it was 2.1 billion in quarter two 2024. It was even less than this, if we go back to last quarter, the quarter before that, and the quarter before that. So it's been very hard for them in this segment. So this is a segment that was lacking the most. When I was, looking at AMD and buying them initially, I was looking at this segment and I wasn't even worried about it. I was just saying, okay, this is a lost cause. But no, they went and they, doubled what they were doing pretty much. They're up 69% year over year. This is driven by record client CPU sales and strong demand for our Radeon GPUs and console gaming products. You guys can't see it, I don't think, but in the bottom right as well, they announced a multi-year collaboration with Microsoft for custom chips that will power the next generation of Xbox devices, including consoles, PCs, and handhelds. So there's a lot. I mean, that's why the client grew $1 billion in, sales. And their operating margin is up 21%. Don't disregard that. That is a great increase for them. So I'm very happy that this segment of their business is increasing because it's not their biggest for sure. I mean, you saw they do $30 billion in revenue. This is only 3.6, but this is very good for them. I mean, this segment growing, I think, is also, nothing bad. So this is another great reason to buy AMD. This isn't even AMD. This is ZT Systems that was acquired by AMD. So like it says here, it's a company that designs, manufactures, and supplies complex server solutions for cloud and telecom providers. So what this company does is they will basically, it's like if you guys know the stock market, you know that APLD is exploding right now. APLD is a company that'll make you an AI hub essentially, just a bunch of GPUs and like a space like AMD has where there's a bunch of processors and yada yada yada. Basically a farm. It'll make you a high tech version of that. That's what APLD does. That's their whole business. But AMD has one of those within themselves. So I think once ZT Systems is recognized as that, once people know that, very great strategic investment by AMD acquisition. I think it was $5 billion, $4.9 billion that it was for that, and it's been worth it. I'm very sure of that. We're going to see that, them reap the benefits over the next couple of years here. I think we're going to see that drive their revenue increase by a lot. We're going to really feel that over the next couple of years. So I think ZT Systems, great acquisition. I think even better than buying APLD because you're getting APLD along with AMD when you buy AMD stock. ZT Systems is doing the same thing. They're going to be another part of AMD's business model. They're doing it for AMD for cheap. For free. AMD's just spending what they'd spend up front. APLD is taking a huge cut. That's how they're making so much money. But ZT Systems, even better, in my opinion. I did a deep dive into both of them. I like what ZT Systems stands for a lot more. So I really think that that's the better investment out of these two. So why buy NVIDIA? We got Lisa Su down there looking happy. She's done great things since the stock was $2. She's been the CEO. Now it's over 200. I think they're eventually overtaking NVIDIA. I think there's two things that can happen. NVIDIA is going to fall or AMD is going to rise. I think that NVIDIA is not going to be the top dog forever. They've done very well. We see them slowing down right now. But AMD is the future, I think. AMD is offering the same, if not better quality chips for cheaper, but for a good amount cheaper. They're the second player to NVIDIA, and they're going to reap a lot of benefits, especially with this OpenAI deal. I see AMD doing very well over the next 3 to 7 years, and I think even if there is an AI bubble, I think there might be. I think AMD gets around this, and AMD is not solely an AI company. Also, a lot of future deals. AMD currently supplies, a lot of the Mag 7, if not all of them. There are AMD chips somewhere in their products. So they supply a lot of these huge companies. What they're doing with these companies is signing these long contracts. They're making a lot of money. And I think this is just going to continue to grow as people see, okay, AMD is doing better than NVIDIA. And then they're also going to see AMD has more powerful processors. Why are we not using them? Let's use them instead. And AMD is also going to feed off of NVIDIA's fall. I think when people see NVIDIA dropping, they're going to panic buy into AMD because they want to be a part of the rise. They want to be a part of the chip space still. So that's going to be a very interesting move when that does happen. And then also ZT Systems. I put a question mark here because it's not a huge part of their business yet, but I think that that is going to be a main driver for revenue and growth in the near future here. So AMD, another thing you could say, AMD is expensive right now, but I think in the long term, that's what I'm investing for. If you guys haven't realized, I'm not buying these companies and trying to sell them the next week. I'm buying these companies for the long term. I think AMD long term is over a $500 stock. I think you're going to double your money pretty fast here. So the fact that it's over 252 might scare some people away. But if you go to AMD's all-time chart, it's still around those all-time highs. And these companies make new all-time highs all the time. That's what they're doing right now. So there's no reason to be scared off by investing in AMD for this much. I think you're not going to get it for cheaper for a while. So I'd probably get in right now. And yeah, AMD looks very attractive at this price. My number one stock is Cheesecake Factory, ticker symbol CAKE. Cheesecake Factory being my number one stock may surprise you, and it should not, because I'm going to go into why this is my number one stock. It should not come as a surprise, and I'm going to show you why right now. So Cheesecake Factory's PE ratio is 17.5. You might say, okay, that makes a lot of sense. Cheesecake Factory has not made any headlines. They don't have good growth rates. Stop yourself right there. I do not care about Cheesecake Factory at all. And that might sound like a crazy statement for someone that's, labeling Cheesecake Factory as their number one stock to buy right now. But let me get to it. So you guys can read right here. Cheesecake Factory has 216 locations. This is Cheesecake Factory's earning presentation. I'm going to reference this a lot in this, review of this stock. So they have 216 locations of that, but they also have 46 North Italia locations, 42 Flower Child locations, and 52 Fox Restaurant Concepts locations. So these are 3 other brands that Cheesecake Factory owns, and they're actually all encapsulated under one, which is Fox Restaurant Concepts, but even that is encapsulated under the ticker symbol CAKE, which I think is the biggest problem. People do not know that Cheesecake Factory, their stock ticker symbol is CAKE. People think it's just Cheesecake Factory. Once they rebrand that, I think we're going to see a spike just from them rebranding that. Call it I don't even know what to call it. Call it Fox FRC. I'm sure that's already a ticker symbol, but something along those lines. Just something about Fox Restaurant Concepts. They need to do that. If anyone from Cheesecake Factory is watching this video, please do that. Your stock price is going to rise immediately. So North Italia. This is a restaurant that Cheesecake Factory owns. They have potential for 200 domestic locations over time. That's a good amount of growth. They currently have 46 locations in 16 states, so they're not small, to say the least. This is a pretty established restaurant chain. Italian is one of those popular ethnic cuisines in the United States. This is a fact. They're targeting 20% average annual unit growth. That's pretty good. That's pretty aggressive, but I think especially in the restaurant industry, expanding a restaurant at 20% a year is very aggressive, but we see them doing it so far, so I think that this is definitely something that can happen. They also have an attractive return profile and sales growth. This is also true. North Italia has a very attractive return profile. We see that their comp sales, they're down 1%. But they're up 2% from fiscal year 2024 versus fiscal year 2023. And I'm not worried about this at all. They're expanding very aggressively. You're not going to see crazy growth rate, or crazy comp sales increases when a company is increasing this aggressively, at 20% a year, especially a restaurant with not the best growth rates. But, when you have so many of a restaurant, the growth rates become very good. Flower Child, I'm even more excited about this. This is the most excited I'm about of Cheesecake Factory is Flower Child. This is the reason I'm buying Cheesecake Factory. They have potential for 700 domestic locations over time. 700. And this is not just some statement that they're throwing out there. Oh, let's make 700. Should we put 800, 700, 600, 300? No. They've mapped out 700 places where they can put Flower Childs over time. This is a differentiated concept in the growing fast casual dining segment. This is also true. They currently have 42 locations in only 15 out of the 50 states. They're targeting 20% average annual unit growth. just like North Italia, very aggressive. It's going to get to that 700 number a lot faster than you think. That's 8 restaurants a year right now about. Next year, that's 9. Next year after that, it's 10. It's going to go very fast. They have a healthy, balanced dining experience with organic, gluten-free, and vegan dishes. This is only growing in popularity as time goes on. I have, like I say in some of these videos where I talk about Cheesecake Factory, I have a friend that's vegetarian. I have friends that are vegan. I have friends that are gluten-free. When I go out to eat with them, they're willing to spend more. They don't care. If there's a burger, but they have a vegetarian option and the vegetarian patty is $5 extra, they don't even bat an eye. That's just, they're willing to spend that, and that's become a norm in the food space. So they can charge a lot of money for these, and it doesn't cost a lot more to make a vegetarian patty than it does a meat patty. Maybe a little bit, but not $4 more. It's a little tangent right there, but all dishes are handmade from scratch daily. This is a very, health orientated restaurant, which is great. That's people are caring more about their health as time goes on, as they should. Health is wealth. Their menu features customizable bowls, wraps, salads, veggies, and healthy proteins. This is a proven business style. We see in great restaurants do this. Attractive consumer demographic, that's very much true as well. They are attracting money. People with money eat at these restaurants. And significant off-premise volumes averaging 50% of their sales. So a lot of their sales are takeout for third-party delivery services and takeout, in general. So that's very good as well. You don't have to sit them down and they're not taking up space in the restaurant. They don't have to pay for some big seating area. People are willing to just take this food to go and just pay for the food. It's that good. So I'm very happy to see that. This is another reason to buy Cheesecake Factory is Fox Restaurant Concepts. Maybe even more of a reason than the other two is they're just not stopping. There's 52 locations in 11 states, and their fiscal year revenue for 2024 was $300 million. Fox Restaurant Concepts is basically the, I guess, blanket brand under Cheesecake Factory, which is not even really a brand at this point. I just call it Fox Restaurant Concepts, that is making these new restaurants. They're coming up with these new ideas and they're making these new restaurants. We see right here, a lot of these brands, every brand that is in Cheesecake Factory was found out through Fox Restaurant Concepts. So North Italia and Flower Child started as, obviously 1 or 2 locations and people really liked them. And then they decided now they're going to do national expansion. They're testing out growth with 3 other ones, Culinary Dropout, Blanco, and the Henry. They're testing out growth with these 3, so we're going to see how that goes. I'm thinking we're probably going to have 3 more North Italia Flower Child type of restaurants. That's adding a lot to the revenue. And then we have boutique brands where they only have a few locations right now. But even these could be in the testing growth stage very soon, and then the national expansion stage. There's so much room for growth with this company. They're doing great things behind the scenes, and I'm very happy to see the future for this company. This is what they're targeting right here. Just, put it all on one page. 2 to 3% annual unit growth for Cheesecake Factory. It's like 4 or 5, 6 restaurants a year. Not a big money maker for them, but if they do grow internationally, it could, bring in some more money. That's not why I'm buying this company. I'm buying it for the 20% growth rates of North Italia and Flower Child, and then 10 to 15% on the Fox Restaurant Concepts. So those aren't as aggressive as North Italia and Flower Child because those are unproven business models. But very soon, I think they're going to get a few proven ones, and these are going to be at the 20% annual unit growth rate. And then also their growth outlook, their average annual growth targets for, comparable sales growth is 1 to 2%. Like I said, restaurant industry, not high growth, not high margin, but definitely has potential to be. I think that if you get enough of these restaurants, it doesn't matter how low the margins are, you're going to do good. Top line revenue growth, 7 to 8%, very, very high percent for a restaurant. Market potential, they have a large TAM runway, so this is very into the future. But when they have all of these locations, they are going to grow revenue by at least $5 billion, and that's pretty much guaranteed. It's just, that's 3x, and then the stock's PE ratio I think will also 2x. It'll be in the 30s. Like if you look at Chipotle's PE ratio, Wingstop's PE ratio, Texas Roadhouse, all these companies at least have a 25 PE ratio or somewhere near there, with Wingstop and Chipotle having around a 30, maybe even a 40. So Cheesecake Factory is going to be at that space, I think, once they have 700 locations, of just Flower Child. Like right now, as a total, they have under 500 locations as a business. They're going to have over 1,000 very soon here. So they're obviously going to grow their revenue if they're, doing anything right, which they're doing everything right. So we see that their future revenue opportunity is $8.5 billion from what it is right now, $3.1 billion. I think this is going to come faster than people think because there's also the Culinary Dropout, the Henry, and Blanco that aren't even accounted for in this. I think those are going to be, the level of Flower Child and North Italia. And when that gets announced, I don't know who's going to hear about it, but I think people are going to hear about it, and the stock price is going to go up a lot. So basically the main thing that's, holding Cheesecake Factory back it's only just their, publicity. People don't really know. And people, once they find out, there's no turning back. It's gonna go up quick. So why buy this company? And it doesn't sound attractive. It doesn't sound like, oh, I want to own a bunch of Cheesecake Factory. No, I mean, I'm in the same boat with you. I don't want to own a bunch of Cheesecake Factory. That's not a brand that I want to own a lot of. But when you bring in Fox Restaurant Concepts, I can't say no. It's just it's so attractive, the return profile on the stock. So why buy it? The growth potential. It is, this stock can grow to levels that you don't even know. It could be bigger than Chipotle, and it would be over a bunch of restaurants that are all owned by one brand and all making the money under that one brand. So it could grow an insane amount. And let's go back and let's look at the stock price with the PE ratio. The stock is cheap. It's cheap. Its PE ratio is 17. Look at the potential for growth on this. I mean, oh my gosh, it's growing at these rates and their PE ratio is 17. That's insane. So their growth potential is, I mean, in the future, I can't even comprehend how much this stock is going to grow. Also, they're severely undervalued. A 17 PE ratio is laughable. It's criminal. This stock is worth way more than a 17 PE ratio, and even if it is a 17 right now, it's going to be in the 20s. I can guarantee you that over the next year, it's going to hit 20 and it's going to stay there. Also, future expansion. So this company, I mean, like we just saw in all of these, kind of just repeating, but the potential for future expansion is insane because we see on this page, they have 6 restaurants. They can expand internationally. We go back to this page, we have these top 6, Cheesecake, North, Italia, Flower Child, Culinary Dropout, Blanco, The Henry. But then we go down, and do I think at least, 3 of these, 8 restaurants are going to expand internationally as well? Yes, I think that probably is going to happen. So you add that onto there, they already have these 6, you add 3 more, that's 9, and then, you just keep adding. It's like cookie clicker. Like, it's literally, it's life. You just, like real estate, you buy 1 property, then you get 2, then you get 4, then you get 5. It's the same thing. That's what businesses do. They're trying to make more money. So I see Cheesecake Factory doing this very fast. Obviously, they care more about than just their Cheesecake Factory brand. That is a big brand for this company. It does good. It's a cash cow. But I think that they do have a lot more room for growth in these other segments. So that is very impressive. I very much say Cheesecake Factory is my number 1 buy. I'd buy all these stocks the same, but Cheesecake Factory right now, you need to take advantage. Cheesecake Factory is more of a timing buy, which I don't promote. I promote time in the market, not timing the market. But right now, I'd say Cheesecake Factory is you're mitigating your risk a lot for buying it this cheap. Thank you guys for watching. That's all I have for today's video. I do come out with daily videos. I upload videos every single day. So if you guys do enjoy this one, I'm going to have another one coming tomorrow talking about something else, maybe another stock, maybe the state of the stock market, who knows. But thank you guys for watching. Don't forget to like and subscribe to the channel if you made it to this point. Be sure to hit that like button, subscribe to the channel, turn on post notifications. Thank you guys so much. Also, comment down below. Let me know what kind of videos you guys want to see. Love talking with you guys as well. Catch you in the next one. Peace.